this Markets.com company profile of the Goldman Sachs Group. I'm your host, Armando Gutierrez Jr. Let's get started with some background information. Founded by Marcus Goldman in 1869, the Goldman Sachs Company is headquartered in New York City. The company employs approximately 30,000 people worldwide and has a market capitalization of more than $65 billion. The main operations for Goldman Sachs are within the United States, with an expanding footprint worldwide. In fact, last year was the first year in which operations outside of the U.S. accounted for more than 50% of the company's pre-tax earnings. Now, there are three core segments that make up Goldman Sachs, and those segments are investment banking, trading and principal investments, and asset management and security services. Each of these segments have their own divisions, which are further divided into other divisions. So who are the people running this financial giant? The company's CEO is Lloyd Blankfein, and the chief operating officers are Gary Cohn and John Winkelried. Now, the company does not have a CFO because of the way the company is structured. So where does Goldman Sachs fit into the whole market? Well, the company is officially traded at three main national indexes, those being the New York Stock Exchange, where it's primarily traded, and also the Frankfurt and Mexican exchanges. The major index it trades on is the S&P 500 in the US. Now let's take a look at some financial figures for the company. Starting in 2007, in which the top line number came in at almost $88 billion, net earnings for the company came in at $24.70 per share for a total of $11.5 billion. Looking into the segments, and the trading principal investment segment have profits of almost $8 billion, while their asset management and security services came in with profits of $1.2 billion. Finally, investment banking profits amounted to $1.7 billion. As we look at the balance sheet, total assets of Goldman were $1.1 trillion, while liabilities were slightly over $1 trillion. Equities make up the difference at almost $43 billion. The debt-to-equity ratio of the firm was sitting at 10.8, and at the end of 2007, the company had approximately 395 million shares outstanding. The stock closed at $215 on the last day of the year, but closed at $166 on August 13 of its year. A total of $810 million in dividends were paid out to the company's shareholders in 2007. Let's move on to operations. The company offers investment banking and financial services to its customers. Where the financial services are involved, they're a prime broker, trading and managing assets for individual clients. Now, Goldman Sachs does have some major competitors, and those are Morgan Stanley and Merrill Lynch. As more commercial and international banks get into the investment banking, more major competitors are emerging. It is also important to note that the company made no major acquisitions this year. Let's talk a little bit about the company's vision. First of all, Goldman Sachs has the belief that with its talent and name brand recognition worldwide, they will be able to expand it to emerging markets, capture market share, and become a leading investment bank in other countries. With that, along with their expertise and their branching out, they can provide their current customers and the growing number of millionaires worldwide greater opportunities to invest. Something else that is new for the company is the Goldman Sachs Gives Fund, which was formed this year as an investment fund in which profits are directed to the donor's chosen charity. Along with that fund, they launched the GS True platform, which allows for the easier sale of restricted 144A securities to all qualified investors. This would make it easier to obtain capital and liquidity for firms that want to sell their shares, but not to go public. Now, without a doubt, all financial firms have somehow been affected by today's financial crisis, but Goldman Sachs seems to be one of the firms that has been least affected. Their stock, while not immune to the effects of Mr. Market, has not declined as much as others and has not been affected by the rumor mill that is Wall Street. Still, the biggest problem facing Goldman Sachs may be their fellow investment banks that needed the Fed to step in to provide liquidity, and we can expect the Fed to monitor and scrutinize the investment banks much more in the future. This in turn makes the business model of investment banks like Goldman Sachs highly questionable. Are 30-to-1 leverage ratios a thing of the past? And if so, can these banks continue to make outsized profits? With that, we conclude this Markets.com company profile of the Goldman Sachs Group. Again, thank you for joining us. I'm Armando Gutierrez Jr.